Your line is now unmuted.
Good morning, everybody. Almost halfway through July. Can you believe the summer is one day shy of being halfway over? And boy, do we have summer right here. We can get in the middle of the summer days where it's 100 degrees plus, and the nights are 80 to 85, and we're in that right now. And we have dew points north of 60, usually hovering around 70. So we deal with very, very high humidity too. It's like being in the deep south. And when we get in these situations, the wind drops down significantly. So we are experiencing summer in all of its glory right now, and it's a good thing we have air conditioning, right? Today the market has got several factors going through. China's markets sold. This is the third day of the recovery. China put out a raft of economic numbers last night with the preface that these numbers are for real. We haven't cooked our books. Take them for what they are. So the numbers all beat the forecast, and China's desperately now trying to salvage their economy and their stock market. It's going to be hard to do. And me thinketh China protesteth too much. When you get out there and talk, I'm not lying, I'm not lying, I'm not lying, these numbers are for real, you're more than likely at least puffing the numbers a little bit. So that's the situation we find ourselves in. We left yesterday's market in the note wanting to sell 31s to 03. The overnight session was 2. We hit that sell zone early yesterday. We had hoped to buy the 21 to 25 area. The overnight session low was 25. You had that forecast in your hands at 2:10 Central Time yesterday. We know what we're talking about. The information you get is good. So how do you put those trades on? Well, you get into that buy or sell zone that we recommended. You get your setups like a retest failure, and we have retest failures right there, and you put the trade on and you see how far it'll take you. And we'd hoped to bring them in at 25. We had a retest failure at 25. The market didn't break, so you were not able to fill at our recommended buy at 25, but you could have done a little bit better, and you had a nice trade for the overnight session. We had a 31 to 03 sell. Limit sell, splitting that, and a lot of people do that, would be 26.01. They put that on with the appropriate risk. Your stop would have to be above 04. Really has to be above that 2-letter ledge right there. And yeah, have a legitimate shot at 6, 7, 8, 12, 30 seconds. So you got really, really good risk reward usually. Okay, after China, we've got a lot of numbers this morning. PPI, no one will pay any attention to it. Could come in lower than forecast, plus 0.3. Core, plus 0.1. Empire Manufacturing Survey. EMS, the Emergency Medical Service, at 3.5. The big number, industrial production, plus 0.2. Capacity utilization, nobody pays any attention to that. It is a factor if we're in inflationary times and the economy is growing. When it gets above 84, people start looking for an acceleration in inflation. Manufacturing production up 0.1. With what's going on in the oil patch, and we have seen some decline in automobile sales, it's still at a very, very healthy pace. That number could come in lower too. And crude inventories, minus 2.0. This is the market's focus, industrial production. We can get a reaction out of the Empire Index. My guess is these numbers could come in lower than forecast given the recent news. And then we get to Yellen's testimony. So we got a news spike on industrial production, then we probably move into development. move sideways until we see what Yellen's going to say. And I doubt if anything's changed. She says, I'm going to raise interest rate increases appropriate sometime this year. We'll do it when the economic data warrants. And that's the position they've had for a long time. And I don't expect that to change. So we're going to sell failure to take out 26.04, which gives a 31 to 03. And 7 to 11. If you had to be long if you had to take a position into the industrial production number, you'd be long in the financials. I'm going to buy below 28.5 is okay, so we're going to buy 24s to 28s, and then 17s to 21s. So after the market reacts to the news, look for sideways until Yellen speaks, and I don't think Yellen changes anything in her testimony. Why would she? I think the Fed's between the rock and the hard spot. It's going to be very, very difficult to raise interest rates off the economic data. I don't see how they can do it. Not saying that she won't, but given what's going on around the world, China and the United States economies are supposed to pull the rest of the world out of recession or economic slowdown, and you can see our economy slowing report by report. Okay, looking at the I can find it. There it is. The 30-year knob spread came in a little bit last night. Again, if the news is bad for financials, knob spread contraction will make the short in the bond more attractive than it will be in the note. If the news is better than expected for financials, knob spread expansion will make it the better play. Now, there's more risk involved in trading bonds. There's a little more volatility. The support and resistance numbers are not as solid as they are, given that in the 10-year, given that the bond at best trades like 1/3 of what the Treasury does. Usually it's a fourth to a fifth, can be a fifth. So right now we went out last night hoping to sell 31s to 03s, didn't get close to it as the knob spread came in. So we're going to make 27s to 31s, sell 1. That's right where resistance is, and 7 to 11, sell 2. On the buy side, 13 to 17, that's pretty damn aggressive. That's right here in the middle. It's a number 2 trade leaning against this high volume number at 14. And then we'll make it 4 to 8. Picking up this area right here for buy 2. Okay, gold did nothing last night. It was very, very quiet. Probably on, I don't even know if it's on hold until the Greece situation is resolved. It's hard to say. There's not a lot of interest in trading gold today, and you can see that. So we left yesterday hoping to sell 58 to 60. Didn't get close. 55 to 57 is resistance, so that's our first sell band. Then if we take out that, I imagine we're 59s to 61s for sell 2. I don't look for any kind of trading range. I don't see a lot of opportunity here. 49 to 51, buy 1. 45 to 47. So if we can catch it at the the 60 area and at 45 to 47, makes a little bit more sense. If you're trading it in that 53, 55 area, just kind of right in the middle. Not much of an advantage structurally. It's a market that there has been years where the gold market was neglected, and that tends to be the pattern. It gets really, really hot, and gets really excited for a couple, 3 or 4 years, then it just dies. And hopefully we're not in that situation now because it's been a really good market for us. But all markets go through volatility, expansion, and contraction, and the volatility has just evaporated. Okay, we had a sell yesterday at 53 and a quarter. In crude, and our first buy was at 52 and a quarter. So right now that looks reasonable. 53 and a quarter. It was worked last night. Why not? 50 to 75 for sell 2. We'll bring that in a little bit. 52 and a quarter. Buy 1. 51.75, 52 buy 2. Okay, inventory reports, minus 2 million barrels. If it comes in minus 2 million barrels, you'd expect the market to rally. Quite often it doesn't. I mean, there's no way to play these numbers. And this is a day that Rich won't trade because of what the inventory reports do to the market. So I think the easiest trade to see is if you get a bullish number and the market rallies and doesn't get follow through buying, sell it. And the converse is true if you get a bearish report. It's been a good trade for us. Looking at the euro. The euro will react to Yellen's testimony. We're at the bottom end of the trading range, so volume is in the 1025 area. The balance point's 1012, so volume's above time. Support's at 110, so that's where we are. That's buy 1. Don't really like the long side. Buy 2 will be at 75 of the market. The industrial production numbers come in higher than forecast. This market should sell. If they come in lower than forecast, it should rally. Put the sell at 1050. 1075 for sell 2. And opportunity-wise, the euro and crude right now are more volatile and offer more opportunity than gold does. I think what's happened in gold is there aren't any sellers. And every time the price comes down, you get, some large entity will come in and smash the market. And last time it was reported to be Chinese long liquidation because of margin calls. Don't know if that's true or not. You never do when you get those stories, but it made sense. It has to have a little plausibility to get wide spread dissemination. And but nobody's really interested in selling gold. And would you? I mean, with this deal that was done yesterday with Iran, if that gets approved, do you think anybody's going to sell our gold? Maybe vaporized if you live in one of the Middle Eastern capitals 10-15 years from now, but has not added to the peace and stability of the world for sure. Okay, looking at this market, the biggest open interest in calls is 2180. These will expire this Friday. 1975 for puts. It's like there are no buyers, or the people are just going to be traded, and they've got insurance in case the market just explodes, and forget about everything in between. Yesterday's play, there was no play in puts, were 2110 calls. The overnight session high was 2107 plus. So I think the market's got a pretty good chance of trading up into Friday's expiration just as the shorts get squeezed. So we'll see where the option play is today, but yesterday it's 2110. Pretty unrealistic to expect a 2180 or 1975. There really is no play in puts. And again, it's kind of like the gold market. I mean, I've tried the short side multiple times since March of 2009. Gotten my head handed to me. My investment guidelines and my stated investment objectives require me to be long stocks. Screw it, I'm long, and I'm not going to spend the money to insure the portfolio in a big way. I'll absorb 100 points worth of risk, actually 125 now, to the downside, and we'll just see what happens. So a lack of sellers is where we are, and then the dynamics of expiration. Okay, again, this market, if we get a bad industrial production number, that means Janet's testimony today will lean towards interest rate increases later rather than sooner. Buy stocks. So 2100 is support. That's our first buy area. 2101.99 buy one. 95 to 97 is the breakout area. That's a better trade in my opinion. On the sell side, we're going to sell failure to take out 750.10. Got this high volume number up here at 13. The attractor stops above 15, so we'll make sell 2. 14 to 16. Reviewing the news, PPI +3. That one could come in lower too. Core usually is understated. They have to cook those numbers, +0.1. That's the default number. Industrial production +0.2. That number could come in lower than forecast. Capacity utilization 78.1. Excuse me, 78.2. No one will pay any attention to that. Manufacturing production +0.1. Strength in the automobile industry could do it. Weakness in the oil industry is capping that. We have the Atlanta Fed's business inflation expectations. Don't want to pay any attention to it. Then crude oil -2.0. Okay, it'll take a bit to get everything up and published. I'm going to get busy on that right now. I will see you as soon as possible. We've got PPI and Empire Manufacturing Survey at 8:30 Eastern to kick off the trading day.